Good morning, everybody. Jason Cole here with DLC Maximal Mortgages for Mortgage Mondays. It's August 31st, 2020. So as far as the question that came up last week is, how do I go about getting pre-approved? Which is a great question because realtors and sellers love pre-approved buyers. So as far as what we'd be looking for as far as income, we look as far as like to see as far as your last 3 years of employment history. And as far as for income documentation, we'd be looking for letters of employment, pay stubs, your notice of assessments, T1 generals, and T4s. Also, too, if a person is self-employed, a business for self, we look for 2 years T1 generals with statement of business activities if they're a sole proprietor. Also, too, if they are incorporated, we'd be looking for articles of corporation to show, the shareholders and directors. Also, too, part of the application process as far as looking to get your assets and liabilities to determine your net worth. So as far as assets, we're looking at big assets like properties, vehicles, investments, savings accounts, and so forth. And liabilities, we're looking at any mortgages, loans, credit card payments, stuff like that, which we'll touch on a little bit later when we talk about the credit bureau. And as far as assets and liabilities, assets minus liabilities determines your net worth. Of course, net worth, the higher the better as far as if shows what a person has, for equity for borrowing purposes. And also, as far as down payment, that's a key thing. Minimum 5% down payment for an insured mortgage or 20% down payment for a conventional. In this, if we're looking at this, say savings or whatever banking history, we're looking for 3 months statements or basically 90 days to show that the money's been in that account for 90 days. Also, too, if a person is getting a down payment, a gift from a family member, we're looking for a gifted letter. And thirdly, as far as there are certain situations, if a person's got a higher credit score and good net worth, that some people may be able to utilize a borrowed down payment, such as a line of credit or personal loan to help with some of the down payment costs. And then as far as at the end here, which is very key as far as the credit, we're looking as far as to actually pull your credit to determine what your credit score is. That could range from 300 to 900. And as far as the higher, the better as far as credit score. Also, too, the credit score is important, but as far as also too, we're looking as far as the showing your payment history, if there are any late payments, and as far as any balances for or the balances for those liabilities. For example, credit card is most common. Almost everybody has a credit card out there. A credit card, we're looking usually you got to take 3% of the balances. So if a person has a say a $10,000 credit card balance, we'd have to utilize 3% of that, so $300 in our debt servicing calculations to determine how much a person can qualify for a mortgage. And as here, as I just want to touch on a little bit more as far as pre-approvals, that's the first step a person should take before shopping for a home. And as far as to you want to find out if you're able to purchase a home and what your maximum purchase price would be. And also too, as part of the pre-approval process, I can provide a pre-approval letter for you and your realtor. So as far as you can go out there shopping for confidence, knowing that income documents have been reviewed, your credit's been reviewed, and as far as with the calculations as far as to determine what your maximum purchase price would be. And here's my contact information, so feel free to reach out to me, text or call my cell there, or else even email me and we can start the pre-approval process. And it's never too early. Like even if you're looking 3 months, 6 months, or a year down the road, it's never too early to take a look to see what your income's at and what your credit score is.